Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the latest trends on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade as well. The markets have been falling for the sixth consecutive session today, a sharp sell-off, and it seems like the bears are completely dominating the D Street. What are the key reasons behind which we are seeing such a sharp sell-off in the markets right now, and what lies ahead? What should be your strategy, and where will the Nifty fall up to? All of this we will discuss with our expert of the day. Quickly, let me give you a picture of how are we trading at the half-time mark of the trading session today. The Nifty is now down by 254 points and is now trading at 18,866. It's not just only breached the 19,000 mark for the very first time in 4 months after June 28th. But we've also seen 18,900 being breached on the downside as well. 1.3% of a fall for the Nifty 50, 900 points of a fall for the Sensex in the intraday session today. The Nifty Bank is a major culprit, 1.4% decline for this one. Yesterday we did see the 44,000 mark being breached. Today we've seen the 43,000 mark being breached as well. 42,210 is the level at which the Nifty Bank is trading at. Sectorally speaking, all the sectors of the Nifty are down in the red, led by the slippage that is being seen on the Nifty PSU banks. Remember, yesterday, this was the only bright spot that we had seen on the Nifty PSU banking index. 2% down for this one. Realty space down in trade, 1.9% of a fall for the real estate sector. Broader markets coming under pressure in tow as well. 1.8% decline for both the small caps and the mid cap 100 index. Healthcare, metal, financials, oil and gas, you name it. All of the sectors are down by over 1% today. On the Nifty 50 stocks, well, you do have just two stocks holding up flat with a positive bias on the Nifty 50 list. Rest of the stocks have all slipped away. M&M, Tech Mahindra, Bajaj Finance, UPL, Nestle, Adani Enterprises, the big losers in trade today, falling anywhere between 2 to 3.5% in trade. The only two stocks that are holding up in the green are Axis Bank and HCL Technologies. Axis Bank is up by 1.2% after the earnings. It's also the top gainer on the F&O space. Apart from this, of course, a few other gainers that continue to hold the fort despite the overall gravitational pull. You do have Voltas, Trent, BHEL, ACC. These are the kind of stocks that are still holding up. But time to welcome our guest on the show to understand more about what does one really make of this kind of a fall in the markets today. Vineet Bulinshkar joins in. He's the Director Research at Ventura Securities. Mr. Bulinshkar, good afternoon and thank you so much for taking the time out. Well, 6 consecutive days of a fall. In this period, the Nifty has slipped 3.8%. This is the sharpest fall that we have seen since about 2022 in the markets. In fact, we've also seen that the Nifty has now slipped below 18,900, the biggest losing streak since 28th of February as well. 1,000 points of a fall is what we've seen on the Nifty. The Sensex has lost 3,000 points in the month of October, in the last 6 days itself. In fact, the biggest drags in the last 1 week of a fall on the Nifty have been stocks like Adani Enterprises, UPL, Cipla, LTI Mindtree, Tata Motors, L&T as well. These have been the biggest contributors to the decline over the last 1 week. But tell us, what do you make of this kind of a fall? You have been saying that the markets may slip further. Have you revised your downside targets now?
No, so we continue holding that 18,500 to 18,600 is what we are looking for in the Nifty in the shorter term. That is where you get a little bit of psychological support. But is that the bottom of the market? Well, it's difficult to say because the situation in the geopolitical world is not very bright. We have seen the Israel war getting intense, and the kind of armory that the US has moved into the region is far beyond what is needed to quell a single country kind of attack. So it's obvious that the US is anticipating a far larger theater than just two countries being involved. And with this kind of setup, the entire Middle East can flare up. This can lead to very sharp rises in oil prices, and more along that is the fact that the shipping rates will go up, which further accentuates the inflationary pressures, not only from oil imports, but also exports, which can thin down. So that creates a veritable problem for India's balance of payments, and that can put further pressure on the rupee. So, in anticipation of that, I think there's a lot of selling by the FIIs getting out of the market. And lack of support in the Indian markets is leading to the fall because everybody is long out here, and everybody, at least a week back, was long to the brim.
Yeah.
So the bullish euphoria has burst, and people don't have further funds to average down, and that is leading to the kind of a demise that is taking place.
Right. So, sir, what are you advising to investors at this point in time? What is the right strategy to adopt?
I think we have uh, the festival season around. We just finished with Dashera. It's just time to enjoy the fun times and not look at the markets. I know it's very difficult to do that, but in this kind of mayhem, if you try to catch a falling knife, you will get hurt. So it's better to just kind of stay aside. And in this, what you can do is you can actually book some tax losses on, restructure your portfolio and shift your portfolio more towards defensives and more towards the large caps. Because, we have seen the kind of run in the mid caps and small caps, which is akin to what we saw in 2008. So these kind of moves, don't happen all the time. We've seen a very, very good frenzied run. So what you can do is you need to restructure your portfolio, because if you're caught holding the wrong stocks in the mid cap and the small cap category, it could be more than a decade also for these prices to come back. So
Okay.
while I'm not saying that the India story is gone away, but you need to be holding the right kind of stocks. So do your research. If you punted on stocks without knowing what those names even do, and in that case, it's time to get out of them.
Okay, but is it also time to perhaps diversify beyond equities at this point?
Gold is a very good option, and interest rates on the higher side are here to stay. We've seen the interest rate arbitrage between India and the spreads between the Indian and the international markets thinning out. There's no spread left. So you can understand that interest rates would be left on the higher side only. So it would be a good bet to lock in some funds from your profits, which go into the debt funds.
Okay. What about, you did say that, it's time that, one should be very, very cautious and perhaps rejig one's portfolio to safer defensive stocks as well. Is it also time to stay away from or avoid any of the dips that you're seeing in the stocks and the sectors that had run away too fast in the last few months? Defense stocks, PSU banking stocks, railways. How do you look at these pockets which had a stupendous rally?
So let's look at each of them, very briefly, like 5, 10 seconds. I think defense stocks definitely need the exposure to your portfolio because the world is at war, and a lot of globally countries will have to redraw on their. They've emptied their defense reserves. So there'll be a clawback, and after this war, all countries will be arming themselves. So definitely they should be a part of your portfolio. So these are stocks to be sipped in the downfall. Wait for the market to fall, find the right opportune time, and then get in. As far as railway stocks are concerned, uh, similar strategy needs to be followed, because if this government comes back, then we are going to see a very, very aggressive uh, outlay in terms of railway stocks. In the case of PSU banking stocks, again, these are stocks which will be bought on declines, primarily because the valuation gap between these and the private sector banks is very, very large. And the differential in the product offering and the quality of offerings has got commoditized. So I think they also offer a veritable bet.
Okay. Let's talk about these stocks, sir. The Adani Enterprises stock, for example, this has been one of the biggest losers in this last one week of a fall for the markets. I think it's fallen about 8 odd percent. In fact, all the Adani Group stocks are crashing today. We've also seen UPL, Cipla, LTI Mindtree and Tata Motors as among those stocks that have contributed the most in this 1,000-point fall for the Nifty in the last 1 week. How would you look at this basket of stocks and what would your strategy advice be?
So, if you were to demarcate between Adani stocks and the other stocks that you spoke about, Adani stocks are, there's a lack of institutional buying in these stocks. So it is purely trading to the whim and fancy of the retail investors. That is number one. If you come to LTI, Mindtree, UPL, so LTI Mindtree is in the IT sector, and these are high growth companies with very rich valuations. And with slowdown in growth, na, these stocks can come off quite a bit. And as I've been telling you on many of our previous shows, that I'm not very sanguine about growth for the IT stocks, and hence I believe that you should be taking your profits while they're available to you. As far as UPL is concerned, the concerns around the debt persist, and while there is a lot of talk that things will turn around, I think the proof of the pudding would, once it is established, then only investors would jump into this stock to buy into it.
Okay. What about the safe zones, on the safe havens in the stock markets, the sectors that you believe that investors can continue to hold on to or perhaps add on or accumulate more stocks?
So I think Bharti Airtel is a very solid safe haven stock to buy. Uh, I think that some of the steel stocks look very good, although they're cyclical. But these cycles are very related to the war cycle, so that is possibly one thing that can do well. Infrastructure stocks, but here you need to be very, very selective. I think you know it's a little contra, because the government is giving a lot of impetus to infra stocks. So good quality names available at lower valuations. Water and the theme around renewable energy, the coal sector, the fossil, because energy is becoming deficit, in the sense that base, while we are adding renewable energy, the base load, which is primarily driven by thermal needs, is not being met. So I think these stocks are going to do well. The distribution stocks, I think, will do well because electricity demand is going to keep on increasing. So these are some of the sectors which are the newfound defensives, as I call them, and you should be focusing on these.
All right, fair enough then. Thank you so much, Mr. Polichka, for being with us on the show and discussing with us all these insights about the markets, the carnage that we are witnessing on the D Street, and what is the right way to really understand the kind of fall that we are seeing. How much more downside do we see from here on? The strategies both on the buy and the sell side that you've advised all our viewers as well. Many thanks for being with us. The markets continue to be under pressure, 255 points of a fall for the Nifty, 18,867 currently, and all the sectors under pressure. It's a broad-based sell-off that you've been witnessing, and there are some more there is some more downside that experts do see. 18,500, 18,600 is the next target for the Nifty that Mr. Bulichkar has at this point in time. He does say that, this is the time to sit back, really, not get too much panicked about it, because the situation is largely global in nature, and definitely a reaction from the geopolitical world and the tensions that are rising in the Middle East is something that is impacting the global markets at large as well. However, you can still take a view from your own financial advisors to find out if this dip in the market is something that you should definitely consider buying into, and the strategies that you can adopt. Many thanks for being with us on the show, and continue to be with us through the trading session. As on Business Today Television, we will continue to get you all the top market voices to help you understand how do you strategize best in this current fall in the market. Many thanks for tuning in for now.